me to address or make a video of. Let me know that in the comments as well. You guys been asking me mainly about options trading, so I'm gonna get to that. That's what I want to make this video for. But briefly, before we get to it, I want to touch on for the people that's been asking me about making long-term investments. Long-term stocks you want to buy in. These are stocks we want to buy and hold from 1 to 3 years, if not longer. We'll sell those stocks off though if something drastically changed about the company, or you know what I mean, you got headline news comes out that this company did something terrible, and then we'll want to sell off. We'll want to reevaluate and sell off our stocks of that company and reevaluate our position and reinvest into a company that's better suited for our money. But these are companies that with long-term stocks, we want to make sure that they have growth potential. So we'll check the balance sheets. We'll check your ROIC versus the WACC. ROIC is just the return on invested capital, and the WACC is weighted average cost of capital. So we always want the ROIC higher than the WACC. We check the ROA and the ROE. That's just your return on assets and return on equity. We just check all these numbers just to make sure the company is profitable and they got good balance sheets, basically. And also, we don't want to buy long-term stocks when the company is at an all-time high, because you know what I mean. When the company's at the all-time high, there's a lot more likely that it's going to come down versus it going further up. So I like to buy my long-term stocks when a company dips. When something bad happens or something before it goes back up, I like to buy it on the dip. That's just my personal stance. Like I said, you want the ROIC higher than the WACC. Check their balance sheets, and I can make another video on that also later on if you guys are curious or want some more information on that. Excuse me. The main thing is though, I wanted to make this video on options trading because that's what I've been getting the most questions on, and everybody's curious about trading options, and they seen the money that's in options trading. So I want to get to that. All right. So let's get to options. And take notes, rewatch this video if you have to, and please let me know if you have any questions in the comment. The first step is you have to have a brokerage account in order to trade options, and there are several different ones, and I'm going to say the one that most traders that they knock on Robinhood, but I like Robinhood just simply because it has low fees, like 4 cents per contract. They also have crypto, ETFs, regular stocks, and options trading all in one place. So it's convenient, and yeah, it's user friendly in my opinion. So I just like Robinhood. Also though, keep in mind though, they do have a 4-day waiting period. So whenever you deposit your money in there, it's going to be 4 days before you have access to that to start trading. They just hit my cousin Romy like that. He just missed out on that Meta and Tesla play I tried to put him on because of that waiting period. But that's all right though. We still gonna get some money for him. Well, what else? I just want to get straight to it. I want to walk you guys through an example. Today I want to use SoFi as an example, just cause 2024 was its first year of full profitability. I believe they generated 2.7 billion in revenue, which was up 26% from the previous year. And then their net revenue was 739.1 million, which was up about 24.4% from 2023. And if you could get in on a company when it just now starts turning profitable, you know what I mean, then you can kind of ride the wave up versus buying in a company that's already been profitable for 10, 20 years or even 10 years, you know what I mean? You could kind of get into the company before they make that trajectory straight up. With that being said, let's get straight to it. I wanna walk you guys through it with SoFi. Also, another reason why I wanted to show you guys SoFi is because it's an affordable company. It's it's not very high. It's right now I believe they're sitting at 1561. So what I'm gonna do, we're not gonna waste no time. We're gonna jump straight to it. I'm opening up my Robinhood account. I'm gonna type in SoFi is the ticker symbol, and a ticker symbol is basically just the abbreviation that the stock market uses for each company. So when I pull up SoFi, it's sitting at $15.61. We're gonna click on trade, and then once we click on trade options, it'll bring you up the options chain. And then at the top of the screen, it'll give you dates, and these dates up here are going to be the expiration date for your contracts. So we click up because we think the stock market is going to go up. That's a call. Anytime we think the stock market is going to go up, that's a call. We're going to go with that February 7th date. And then the current price is 1561. So anything below that number would be considered a in the money play. I always make my plays in the money plays. So we're going to go anything below that because we're in the money. We're expecting the price to go up. So anything below the current price would be an in the money play. I'm going to click on $15 strike price. That's sitting at, it's got a premium of $1.03. Then when we click on it, it's got a delta 0.74. I like that number a lot. Anything between 60 to 70 delta is really good. Anything in that range is good. I like to stay around that range. And the delta is basically every dollar that the stock price moves up, it's gonna be multiplied by that delta. That's how they're gonna determine your profit. So I like a high delta. When we click on that, the max cost is 103 because with options contracts, everything is multiplied by 100. So you got to multiply that $1.03 times 100. Then you got to figure in the Robinhood fee, which is 4 cents. So $103.04 for one contract. And that's going to be your max loss. You can't lose more than what you're buying this option contract for, but your profit is unlimited because it's multiplied by 100 depending on how high the stock goes. That's why options contracts are very lucrative. Let me go back here. Let's move this expiration date out and see when we move it out a week, that premium starts to go up a little bit. The further we push that expiration date out, the higher the premium goes. And that also is going to drop the delta down a little bit because there's more time for that delta to move. You know what I mean? There's more variables to it. The other Greeks, the theta is kind of just like a time decay. The closer our contract gets to the expiration date, it loses value depending on that theta. Excuse me. I want to push this out April 17th. Let's see. You see there's less strike price options also because you got to have open interest in the contract in order to sell it. It's still got a 63 delta. I like that. And it's only $235. So, you know what I mean? That's not bad at all. That's why I like dealing with SoFi because it's not very expensive. Most people, we can afford these contracts. Let's go and look at January 16th, 2026. See, we could go a whole year out. These are considered leaps. Anything with an expiration date for a year or further out is considered a leap. And that still got a 67 delta, and it's $445.04. So that's not bad at all. I like that. Personally, if I was doing a options call on SoFi, I'd probably go closer a year out because you got more time for that stock to go up. The break-even price though is $19.45, so it has to go above that break-even price before you can make a profit, if that makes sense. So if it only goes up to $19.45, then you're just breaking even. You're not losing anything, but you're not gaining anything. You're just breaking even. So anything above that is profit. I want to show you guys the candlestick charts and kind of get an idea for support just a little bit. Support is the support levels are key. Support and resistance levels are key. I like to buy my calls. I always buy them when they're close to that support level. The support level kind of reacts or acts like a trampoline or the floor. So whenever that price comes down here to that support level, it kind of bounces up off of that floor, off of that support level, and tends to go back up. But it can break through and go and set a lower low. So you have to be careful, guys. Got to be careful and be patient. Wait for that next candlestick to open up before you exercise that contract or just jump straight in. Lots of people, they lose money because they jump in too soon or they're not patient. So please be patient, guys. Resistance level is just the opposite. It's the price range. It's kind of like a lid. I like to tell people it's the price range when the stock market, when the stock raises and it gets to a certain number, that lid kind of wants to hold the price down and push it back down. So it creates resistance every time the stock reaches that price. With that being said, I think we pretty much covered just about everything. When you first get started, just do one contract at a time. The more confidence you get and the more knowledge you learn about this, then you can start increasing the number of contracts that you're doing. Also, just remember that your entry is key. Your entry is key. It's vital that you have a good entry point. That's gonna determine whether or not most of your options are successful or not. If you have the correct entry point, that's gonna be big. If you could go through, please like, share, subscribe. Let me know if this video was helpful or not. Keep coming back. I want to keep trying to share knowledge with you guys, and we can take this journey together. Let me know if you do have any questions. Everybody that knows me, you already know I put my name on all my business: Mercs Doors, Mercado Properties. Now it's Mercs in the Market. Just like mercenaries, we go wherever the money's at. All right, the market's constantly changing, so we had to be able to adapt and adjust and react to the market. So with that being said, I'll see y'all next time.